Happy Friday, Brian Manning with the weekly update. Let's get right to it. This week, one thing moved markets, and that is oil. And when oil moves, mortgage rates move with it. Oil shocked everything this week. Earlier this week, oil exploded to $119 a barrel. But why? Tensions in the Middle East, disruptions in the Strait of Hormuz, one of the most important shipping routes on earth. Markets hate uncertainty, and mortgage rates moved higher. Then all of a sudden, reversal. A few days later, oil drops down to $90 a barrel. Why? Because shipping resumed through the Strait of Hormuz. And speaking of which, then we had a global release of oil reserves. Sign that maybe the conflict is cooling and everything is cooling down. But the story doesn't end there. Then we got more volatility because all of a sudden we got reports of a tanker attack or tanker attacks hit the news. Oil jumps again, markets swing, mortgage rates move higher. The bottom line right now is that energy markets are moving anything, everything, and volatility comes from that. Then we get inflation. We got a couple different inflation reports this week. Inflation is coming down slowly, but it's stubborn to move slower. Core inflation is still running hot. It's at around 3% right now. That's definitely above the Fed's 2% target. One bright spot, though, is housing inflation. Lodging away from home and rents. This is the smallest rent increase that we've seen in years, and that's really important because this is a huge driver in the inflation report. Meanwhile, housing shows some strengths because we look at existing home sales. This beat expectations. This was higher than expected, and mortgage applications for new purchases were up 8%. That's good to see. First-time home buyers increased in the market as well, and inventory is still 17% below the pre-pandemic levels. So housing everywhere is looking really good for us. Then we get some feedback on the economy. This is GDP. This was revised lower to 0.7%. It actually helped the bond market because it showed a little bit of slowing in GDP. And then we look at job openings. So job openings came in a little bit stronger than expected. We'll have to wait and see what happens because this is a report that comes out every single week. Looking ahead next week, we have a big week next week. Federal Reserve meeting on Wednesday. Nobody's expecting a rate change there, but markets around the world are going to watch. So right now, I'm watching three things very closely right now. Oil, inflation, and the Federal Reserve next week. What's going to happen? We'll have to wait and see. I'm around all weekend. If you have any questions, let me know. I'm available 7 days a week, 8 to 8. Agents, we got a brand new class rolling out starting next week, Thursday, Capitol Grill in Denver. Just list, just sell, just win. Please RSVP. It's almost sold out. If you can make it, we'd love to have you there. Happy Friday. Have a great day.